Good weekend, all. Epstein with your May 26th, this is Memorial Day weekend, SPDR ETF stock market wrap up. And this is your weekly edition, as I like to do it, on Friday. All right, my friends, the rug gets pulled out again. You know, politics being what they are, and Biden having spent his life as a senator, pulled another quickie today. So you'll say, well, what did he do? As you know, we've been told that everybody's getting close to making a deal. They're down to maybe a 2-year deal instead of the 10 that the Republicans wanted. There is going to be a small increase in defense spending. There will be other parts that discretionary money can be used in other ways, and that sort of gives you a little more spending, but not overall, because there will be a cap in place on things. That's what's been agreed to. And there's a big issue about the Republicans wanting to not allow people that are able-bodied to get Medicare and other government programs if they don't work a certain amount of time during the week. Key, they're able-bodied. That is not the case for the Democrats. I'm giving you it in the most simplistic of ways. So they've been hung up on that and a few other issues. As for the IRS, it appears that now they're going to take $10 billion of the $80 billion away, so the IRS man is still coming. Get ready for that. Well, did they get it for people making over $400,000? That's where they'll concentrate. Don't know the terms yet, but we'll hear about that. And there's more and more and more of this. So what did they do? You know that the rush has been because we had a June 1st ex-date by Miss Yellen. That gets everybody rushing at this. People are supposedly, the negotiators, staying in Washington to get things done. So at the last minute, very late in the day, when no progress was being made on the work part, with both parties standing back, no, the Republicans want it their way, Democrats theirs, what do? Miss Yellen comes out and says, oh, we have found money. We have a way to pay the Social Security on June 2nd, and we think we now have enough money to make it to June 5th. So you'll say, well, that's great. Look, they can do it. It's not so great. Not that the money's not there to be paid. It puts everybody back. What do we have to rush at this so much for? We have until a week from this coming Monday before they're out of money. We can take this all the way to Thursday or so and argue and hold our ground. Well, that's going to allow everybody to come back from their holiday or stay where they're at and voice their concerns to McCarthy and to Biden. And I don't think it's the best thing that could have happened. I think you were on a path to get something done, and I think this is not going to derail it, but it's going to make it a worse negotiation. I put this up just because I want you to be aware. We're going to come to this in a minute. This ends very soon. If you like to take advantage of the offers as I put them out for you from time to time, you're going to get that Memorial Day special. So I'm going to stay with TLT. I was going to change this, and I don't think I should. And the reason is this gives you an idea of what interest rates are doing. Now, as you know, the market had a nice rally starting in October, and this is a weekly chart. And all of a sudden, the market has gone from the March peak, where interest rates were really falling, to going way back down. And we're now attacking the zones that we were in the February period with March. In other words, we're adding yield. And what Ms. Yellen just did will only add more yield, in my opinion, because politicians, being who they are, they will now dig their heels in and fight even more. So do I expect that all of a sudden tonight, we will hear for tomorrow, that's being Saturday, that the bill has been put to paper, the members are getting it? I don't. I'd like to be wrong. I hope that I eat crow when I do this again with you Tuesday morning, but I don't think I'm going to. So I'm looking at this, and that is what's adding yield. I had one of my clients write me, Ira, how can the stock market keep running like this as interest rates are moving up? And it's running because the market was euphoric that we would have a deal on paper tonight, and they'd be voting on it on Tuesday. Well, that rug's been pulled back. I didn't say out from under him, but pulled back with what Miss Yellen did. And if you think that's not politics coming from the big boy Biden, boy, are you wrong. Lower highs, lower lows, market coming down. The trend is still down. As we step over here, where's the support going to come in? Watch where the numbers come in here on the Bollinger Band. Right there. So this numbers, we're looking at it against the 100 level. That's your first serious support zone. Markets don't like to get under that. Could they? Sure. Look what happened here. You could run it. No question you can't run it. Get a failure in this deal and get no deal, you're going to get that pattern again, and the market will go on you in a rather negative manner. So I'd be a little bit cautious on all that. The next step we look at is where are we in momentum? You're not through. You're not even in oversold territory yet. You'll be there this coming week if you stay down, but you're not there yet. So it'll be an interesting time. I never tell clients that they should go short under Bollinger Bands. If you're going to play for this that one time, I wish you the best, but that's not what I would be doing. But I want to open your eyes up to the fact that if this thing drags out, and if, as I suspect, the only reason that Yellen came out today, why couldn't she have come out, just to give you an example, Monday, Tuesday? They'd have had the plan in everybody's hands. What do you think? Because they're not getting the way they want, the Democrats, and they know the game. These are pros. Biden's a pro. And he goes, let's buy a little more time, see how much more we can get from them. That's what's going on. In PLTR, this is Planetary. Now, if you don't know what this is a software company that uses AI. It was actually just taken into Ukraine. It's very interesting. And it's been on a tear because everything to do with artificial intelligence is on a tear right now. You've gotten up to the 100-day average, the Bollinger Band. Do I think the stock is too high here? Absolutely. Markets don't stay over the Bollinger Band more than 5% of the time. Now you got 1, 2, 3 weeks in a row over it. You rarely go beyond 5. I'll stick with what I teach. You've had big breaks in this before, but notice how it stays within the band. So I do think it's getting itself overvalued. I can make a case for this stock being greatly overvalued. Not a bad company, just maybe too rich in price so fast. A KRE. So we've kept the bearish embedded reading. Until you lose that reading with the move over 21 on a closing basis, these rallies are probably getting sold by traders. Now, but what nobody's talking about is all these rates are going higher, and they're going higher day upon day upon day. You're absolutely adding yield every day. That hurts because investors they're smartened up now. Hey, you want to keep my money here? I want money on my money. I want 5%. How do I put it into 30-day? How do I put it into 90-day? How do you get me a CD of 6%? Well, instead of the bank paying a quarter, a half, 1%, and a lot of them were. Now they got to pay real money. That hurts the bottom line here. So keep your eye on that. We'll see if we hear anything about it in the press soon. In XLI, you're still in a bearish trend. This is the industrial sector. Why would you want to be bullish the industrial sector is what I keep asking my traders and other investors. When you have a market right now, interest rates are high. And from what we saw today, if you looked at the core PCE, it is sticky and it went up. There is zero reason for the Fed to sit pat or cut rates right now unless no deal is met. You heard what I said. If they don't do a debt deal, if this thing stretches out, no, then it has to do something to accommodate the market and prevent the economy from just falling apart. Barring that, and that gets done, why should the Fed move? I mean, I could be very wrong if the jobs report comes out weak. I don't think it's going to. I'm looking at unemployment claims yesterday. They are just falling, not going up, falling, the exact opposite of what you want. And the service sector is super strong. Be careful. We then take a look here at XLE, the energy sector. So we have June 4th, the OPEC meeting. That will be greatly watched. Mr. Novak, the deputy minister in Russia, has said that he does not expect OPEC to do anything. Of course he doesn't. He's going to say that because Russia not only did not do the 500 million barrels a day, they have no intent of joining OPEC on a cut. They need to fund their war. They're selling oil at a large discount. They'd love to see the other OPEC members cut. raise the price so that even though they sell at a discount, they get more. The discount wouldn't be, if Brent goes up, the discount in relation would be a higher net number to them. So I don't know that he speaks for OPEC. Let's see what OPEC says, but be careful. You don't have a trend. You have a higher high, lower low scenario. And remember, the higher interest rates go, people will say, oh, we're going to have a mild recession. Interest rates are in themselves doing the Fed's job. They will. Go to your bank, try to get a loan. You're going to have a problem. You're a small businessman. You need to fund your business. You've now gone short-term money. You've probably gone up 1.5 points in no time at all. That's a lot. How do you factor that into your profitability? A lot of things at work. Higher high, lower low in FXE. What does that tell me? It tells me in plain English that you have a market with the dollar in a runaway mode, and you got to be very careful here. It is going to stay very, very strong. So when I put that all together, there's an area here where I want to bring you into it. In the mornings, I put out a morning subscriber video. I try to record the one for the SPDR ETF beginning at 9 in the morning. Well, to go along with it, you can choose any free course if you want to subscribe to a 1 year of my research. It can be the SPDR ETF. It can be the futures video only. It can be the full futures package, which is the written updates and the like. You buy 1 year, choose the course. It could be the full charting course, $400 value. It can be the SPDR, the ETFs by themselves, closer to $200 values. By themselves, the course are $120, but then you get the charting software, you get the other parts that I throw with it. So you put that all together, I think you find it pretty interesting. How do you do this? You move your cursor to the top. When you move it up there, you'll see an icon appear. Click it. It takes you right to the web page that you need to fill out the form, and away you go. And no, you need not start the course right now. You tell us when you want to start it. We send you a whole way that you get that done, and then we begin all that. And with the course, let's assume you bought the SPDR ETF. I'm going to give you my full research for 2 weeks. So you're going to get an awful lot that comes in here, and you can see how that comes on the futures side. If you have questions, call my staff. It's really that simple. I'm Ira Epstein. I want to thank all the Civil War boys, both sides, that fought that war and gave us American freedom. That's what Memorial Day started with, and that's the spirit of it. You have a good weekend, all.